Hey guys, Lovejoy Mashiana here, and in today's video, we're going to be going over the 7 non-negotiable steps that you need to take in order to give yourself the highest chance of success when it comes to trading Forex in this industry. And the reality is 90% of traders that come in this industry to even start trading Forex, they lose their money. Only a small 10% of people actually become profitable. And if you think about it, 90% fail rate with a 10% success rate, that's actually on par with pretty much any other business you could possibly start. Matter of fact, 90% of businesses close down and fail within the first 5 years of getting started. And looking at it from another perspective, you just take a group of just 10 traders, one of those 10 traders is bound to become profitable. And I'm going to show you in this video today the exact 7 steps that you need to take to give yourself this highest chance of success in order to become that one person, that profitable person. So if you're the type of person that loves to take notes, this is definitely a video that you want to take notes on, rewatch it multiple times to fully understand the 7 key steps that you need to take in order to give you the highest chance of success. So if you like the sound of that, go ahead and hit the like button, and if you haven't subscribed to the channel already, go ahead and hit subscribe because we release videos just like this on a weekly basis. And make sure you hit the notification bell so this way you get notified whenever we do upload any more videos. Without any further ado, let me go ahead and roll the intro and we'll get started. So let's go over the 7 steps that traders need to take to give themselves the highest possible chance of becoming part of that 10% of traders that do find success in the markets. Now, by the way, at the end of this video, I'm actually going to give you the whole checklist, the cheat sheet that you can print out and just put it on your desk as you go through your Forex journey. So make sure you stick to the end of the video so you can print it out and you can have it on your desk and just keep checking these things off as you learn and develop them. Now, the very first thing, step 1, the first step that you must take when you enter the world of Forex is you must learn the foundations. This is no different than building a house, right? The first thing that happens when you build a house is you have to build the foundation for the house to be put on. Same exact thing when it comes to trading. Each and every single trade that you take, think of it as you're just adding another brick to your house. But first, before you even take any trades, you need to build that foundation. And what do I mean by this? Building a foundation, what it is, it's learning the basics, right? It's learning what a pip is. It's learning what lot sizes are. It's learning how the Forex market even works, like how we trade currencies. We're trading one currency versus another currency. And you're able to understand that whenever the price moves up and down, all that's happening is the exchange rate between the two currencies is just fluctuating up and down. Things like that, understanding how to choose a broker, how to even create an account with that broker, how to create a demo account, how to fund your account, understanding margin, leverage, understanding all the basic things. That's the very first step that you need to understand before you even get started and inputting your first trade. And the good news is I've already released a free whole mini course for you guys that goes over all of that. Matter of fact, if you haven't watched it, I'll leave a link right over here where you can just watch the whole 5-part mini series. And once you do watch it, you can check the first thing off the list. And once you have the foundation set, it's now time to go to step number 2, which is understanding what are the fundamental drivers that cause the prices to move up and down in the markets, right? It's understanding what's happening in an economy versus another economy that is actually driving the chart to move up or driving the chart to move down. All these different things come in place, and being able to really truly understand what are the fundamental reasons and the drivers that cause the price to move up and down, that helps you determine which direction that you should be trading, whether you should be trading going long or in the up direction, or whether you should be trading going short or in the sell direction, up or down, it doesn't matter. Being able to understand what's happening in these countries, what's happening in these economies allows you to have a high chance of success when it comes to understanding which direction in the market you should be trading. And number 3 is being able to dive directly into the charts and being able to locate various different sweet spots in the market where the price has a high probability chance of being able to react in specific areas, right? So how do we do this? This is by looking at what has happened in the past in the market and being able to use what's called technical analysis to be able to find these high probability areas where you could enter a trade and find the next high probability area where you could exit the trade. That's learning and mastering mastering how technical analysis works. And by the way, there are many different ways you can use technical analysis. Some traders like to use what's called indicators, right? Other traders like to use what's called price action. Either way, you would find a form of technical analysis, a strategy that you feel is the best for you, and you would just practice at it. Now, what's price action? Price action is basically looking at what price has been doing in the past in historical data and kind of looking at and finding these different sweet spots. And trading with indicators, what's that? That's putting various different graphics over the charts themselves, various different lines, various other different indicators or the algorithms and equations to be able to give yourself an idea of where the price might go based on what these indicators are telling you. Either way, you would find a form of technical analysis that suits you the best. So now that we have number one, the foundations, and number two, fundamental analysis, and then number three, technical analysis, and now we need to understand that whenever we do enter these trades, we need to make sure that we're using the proper risk management when it comes to entering these trades. And this is called money management, or in other words, this is called risk management, being able to understand that whenever I do enter a trade in my certain different sweet spot that I might find, I need to make sure that my trade size isn't going to be way too big, or I got to make sure my trade size isn't going to be way too small. Being able to put your trade size the correct amount, that's the next step when it comes to having the perfect trading plan. Because the reality is, when it comes to fundamental analysis and technical analysis, that's a very easily learnable skill. You just have to practice it, right? But when it comes to money management, a lot of traders, because of either fear or greed or any other different emotions that they might have, they just aren't able to master money management because they just want to make money too quickly. But being able to master this skill, being able to master money management, that will set you apart from 90% of other traders. You don't know how many different people that I've talked to in the past that always tell me, man, I risk 20% of my account on one single trade, and then I lost half of my account because the price went completely against me. And I've heard other people that say, man, I've opened up like 5, 10, 20 different Forex accounts, and every time I open up an account, I put $500 in the account, and then 2 weeks later, I lose all the money. Then I have to put more $500 into the account, and then I end up losing that money. And the same process keeps repeating over and over and over again. That's not a technical analysis or fundamental analysis problem. That is what's called a money management problem. And that's the issue a lot of people have because number one, they just haven't been taught the right way. And number two, if they have been taught the right way, their mindset, their psychology always brings them back to avoid following the very specific rules and plans that they put in place when it comes to money management. Now, speaking of rules, speaking of discipline, this brings me to step number 5. This is understanding and being able to master your psychology, being able to master your mindset, and being able to literally master your emotions when it comes to trading. Because the reality is, many traders, especially brand new traders, when they come into the market and they enter these trades, if they see on their phone that their trade is in 2 pips profit, 10 pips profit, $100 profit, they want to close their trade really quickly because they don't want the price to go against them, and they just get overexcited and just want to close that trade. But whenever a trade goes against them, they just don't want to accept that loss, so they hold their losing trade for longer and longer and longer and longer and longer until it inevitably wipes their account. And at the end of the day, this falls on discipline and being able to master your mind, being able to master the 6 inches in between your ears. There's a thing in the trading world that's called revenge trading. Brand new traders probably haven't experienced this yet, but for those of you that have traded for a few months, you know exactly what I'm talking about. You enter a trade, it goes against you, and you get mad at the market, and you don't want to accept that loss, so you enter another trade to revenge trade into the market because you don't want to end the day on a loss. And this in itself is a psychology issue. There's so many different things that come into play, fear, greed, all these different emotions that come into play, especially because we're dealing with money. This is an actual skill that you have to learn and master because we're dealing with cold hard cash. And it is human nature to be greedy and fearful. So once you can truly prove to yourself that you can master your mind, that will be a turning point where you finally start becoming profitable. Now, step number 6, the next step, once you have a strategy in place, once you have your money management, once you have your psychology, once you have every single thing put in place, you now have to practice your strategy. You have to create the strategy, understand it, and make the strategy, and you have to practice it on what's called a demo account. It's opening up an account, playing with play money, pretend money, and just doing it over and over and over and over again, and just looking at your results, practicing it, making sure that you don't deviate away from the plan, because many people, and it's a very hard psychological thing to master, many people always end up deviating away from the plan because of maybe even like a string of losses, or maybe they see like another shiny object over there and they get attracted to the other shiny object because they have shiny object syndrome. But being able to practice it on a demo account, sticking to your plan and seeing your account grow slowly and slowly and slowly, being able to see that equity curve grow, that's the 6th step of becoming a consistently profitable trader. Now, what is step number 7? This, I feel, is the most important step. People do steps 1 through 6, but they never do step number 7. What is step 7? Step 7 is refinement. What do I mean by this? What I mean is refining your craft. What I mean is creating a trading journal. I know, because we track all of this, 99% of traders do not and will not ever create what's called a trading journal. And by the way, if you don't know what a trading journal is, all it is you can just make like an Excel sheet and just write down every single trade that you took, and write down the reason why you took it, write down where you entered, write down where you exited, write down how you felt, what your emotions were as you were going in the trade. Most traders will not do that because it's considered work for them. You have to ask yourself, are you going to set the bar low for yourself, or are you going to set the bar to the industry standard? Because I'll tell you, the industry standard of successful, profitable traders, they are writing in their trading journals consistently. So why would you not write your trading journal? Why would you not put yourself at the same exact standard as what the profitable traders are doing? And most traders won't write a journal. And even after watching this video, I'm literally telling you to write a journal. And guess what? Of all the people that are watching this, you can count the view count on this video. 90% of these people will never make a trading journal. 10% of them will take my advice and they would add a trading journal to their trading plan. And that's just how life is. It's Pareto's principle. It's the principle of most people, the majority, the masses won't do anything with the information, and only a small, tiny percent will actually have massive results. It's because most people aren't willing to put in the grind, put in the effort, put in the work to do what's required. So number 1, creating that trading journal, being able to refine your craft, and looking at and honestly taking a step back and asking yourself, how could I have improved on these trades in the past week or in the past month? Asking yourself, what currency pairs am I good at trading at? What currency pairs am I not good at trading at? The ones that I'm not good at, should I try to work and improve those? Or should I just completely eliminate those from my trading plan and just focus on the pairs that I'm good at? It's asking yourself these questions so you can refine your skill and you can slowly start increasing your win percentage month after month after month after month. Because if you realize that maybe a certain type of technical analysis doesn't work for you too well, or maybe you realize your stop losses are always way too tight, it's being able to work on it, adjust it, refine it until you get it to a point where you have the highest on the bell curve, where you have the highest profitability in your trading strategy. So what did we go over? Number 1, foundations. Number 2, fundamental analysis. Number 3, technical analysis. Number 4, money management. Number 5, psychology. Number 6, practicing your strategy on a demo account. And number 7, being able to refine all of this, putting it all together and actually practicing and working on your craft. Always being a student, always being eager and willing to learn something new that would enhance your skills when it comes to the world of trading. Because at the end of the day, the markets are always changing. So either we're adapting or we're dying. And the good news is steps 1 through 5, I can teach you that. Many students have gone through our Market Makers University private coaching program and became highly profitable. And you want to know what pattern that I've noticed that creates the highest profitable traders? It's the ones who work hard on the last 2, on 6 and 7. Anyways, that is all for today's video. I appreciate every single one of you that watch these videos to their entirety, because it shows me that you guys are taking this trading industry seriously and you want to make a serious change in your life. So thank you for sticking to the end. The downloadable file for this checklist is in the description. So just click on the link, put in your email, and we'll send it right out to you. And if you haven't subscribed to this channel yet, definitely do so. And make sure you hit the notification bell so it alerts you whenever we do upload videos, because we're going to be putting out some fire in the next few weeks, the next few months. So stick around and we'll catch you in the next one. Take care, guys.